Hey, good morning, everybody. Today is Tuesday, May 16, 7:49 a.m. Eastern Time. So yesterday, I posted over here at 5:33 p.m. Eastern Time. How the options design, the market movement. If you check the deltas and the gammas, basically at the close yesterday, show us a flat market, right? Because you have positive deltas at 4,138. I also put over here 4,138. We have positive deltas. Yesterday, the gamma, the call wall was set up at 4,140, right? So basically where the positive deltas are. The negative deltas at 4,135.9. So 4,135 is where we have negative gamma. Yesterday, that's the picture from yesterday, okay? And the delta neutral basically shows us that where we close yesterday. Consequently, we don't have any discrepancies, no big spreads between deltas. No, so difficult to predict movement, right? Really difficult to predict movement. It's not showing us, not giving us any clue, basically. Okay, because that is, I told you guys, if you know market, if they in overnight they want to squeeze people, I mean look from 4 points maximum, and we went up, I guess 4 points. We went up to 4,150. So I also put, the major resistance 4,153, 53.13. We went up to 4,150 in the overnight. Okay. So far they follow the structure that they left yesterday at the close, even the overnight. Something that caught my attention, I post over here, and if you go to our spreadsheet, is log. I need to update. I didn't update the entire spreadsheet yet, but as you can see in line 1,213, somebody at the close decided to hedge himself in $1 million put premium, striking 3,900. Look the volume that appeared in the graph at the close. Somebody decide to hedge him or herself. Fabio, if you not go over there, this person, you lose $1 million. I don't know, because behind this they could be create like a structure. He could be, financing him or herself, building a collateral, etc. But it's kind of hard to identify looking, the orders. But call my attention to see $1 million hedge very far from the money. It's basically is looking for 5% drop in couple of days. Okay, it's a huge hedge. That's of course call my attention. Okay, but anyway, for today, today is 16. So book is flat, put your call ratio is higher in the dark pool, but we cannot consider this too much because you have a lot of call and put sellers in the book. So it's kind of hard to define the movement, right? Deltas flat, gamma flat. Yesterday call wall at 4,140, positive gamma make a limitation of the upside. But let's have the picture right now. We're still in positive gamma, right? 160 millions. But now if you guys check the put wall at 4,100, it's already gone. Okay, it's already gone. They already start to build a put wall at 4,125. Usually, it's a support. It's not huge, but it's bigger for intraday. So maybe 4,125 will be the support. And they move, they move the call wall that was before at 4,140 to 4,145. So it's going higher. Okay, it's really difficult to predict the movement. What we have been seeing, we start in positive gamma territory, we go down to find some support. Today could be 4,125, and then we see a squeeze back to a positive gamma, limiting the rally. But What this mean? They are distributing. No? So they squeeze, basically they squeeze, force people to buy higher from dealers. They squeeze doesn't mean that, they are buying. They squeeze means they are selling, but they are selling higher. They force people buy from them. Remember, they are the liquidity provider. And because that we have been seeing during the intraday a lot of ping pong between positive and negative gamma. Squeeze, negative gamma. Limited rallies, positive gamma. Okay? Yesterday also, you guys already realized that they remove a little bit the liquidity because the DIX dropped 2%. In another hand, the GX jumped 400 millions again. Remember that, last Thursday was 2 millions, 48%. Jump, at the close on Friday to 50%, and they dropped 400 millions in the GX to 1.6 million. Now, they put, all the structure back. So, to move the market, money we needed. Because, the higher GX. As much higher GX, more difficult to move the market. Okay? Because the book is not clean. The book is kind of heavy. Anyway, regarding, I told you about the future, the Harami crossing, etc. So far, the Harami cross that left in 4 hours graph have been respected. So if you see this candle, the top was 4,150.5 and then went down, but closed below 4,180 in 48. That the level that closed this Harami cross. Usually this is a reversal candle. Also, you guys can observe if you come to the SPX. Remember that I told you guys last Friday that we left in the weekly graph a hangman. So we closed at 4,138. And, we built, not last Friday, 2 Fridays ago, right? And then we haven't been seeing market closing above 4,138. So far, do the hangman left, 4,138 is the major resistance. To confirm the hangman, market cannot break 4,138. During the intraday, that's totally normal to break, but you need to close below the hangman. And yesterday, bulls had an opportunity again to bring market above the hangman, but they failed. And also the bears had the opportunity to break 4,100, and they failed. Hope you guys understand that both are failed. Anyway, so as Jim Cross, let me repeat now what the Saint Croissant said. A lot of people just, is kind of lazy, is not, listen the podcast, and just try to make interpretation regarding, the pictures that he put, the gift that he posted in the Twitter. I'm not telling that he's right, but basically he's saying that what I have been saying to you guys since last month. The only call that I missed was the last trading day on March that we saw the squeeze in JP Morgan, right? That's the only day so far that I missed a call. I didn't really expect that. So, anyway, what Jim Croissant said is basically what I have been saying. I was expecting some turmoil on May 10 because of the CPI. Because it was a very huge a very tough economic agenda, and we had also some factors to see a turmoil: Fed meeting and CPI. I expected a hot CPI, didn't came. I explain why: because the oil price, the gasoline price, the commodities spike. But those data is manipulated. But the CPI came, accordingly at 5%. Didn't came like a cool CPI, as people have been interpreting, right? So, but the turmoil was postponed. And now we have big issues in the table right now. Debt ceiling is one, and the war in Russia that's getting very, very tension down there. But the sentiment wise is totally bullish. The allocation is bullish. The gamma is positive. A few people want to be hedged. You know what Jim Croissant said? Market, usually create a different, bring a different sentimental, and also bring a lot of anxiety to the market. And because that you will not see market dropping. And also he cited, 2008, 2019, and other, events that happened in the past, especially 2008. Now, what he said that we have a new window that you could see a crash. He even said the word crash, but he said a huge sell-off. Huge sell-off means crash, right? And also, when you see the book, somebody, buying $1 million put protection out of the money, it's because, the market's not so healthy. Also 10%, 10 stocks are they responsible for this melt up, and all the 10 stocks that was responsible for this melt up are techs. And who will be affected if we will see a debt ceiling? Techs, because the biggest contracts from the techs came from the US government. I worked for Hewlett Packard before. Our biggest contract when I was there was the US government, 5 years, $2 billion. Imagine if HP, that's a company that's trying to survive. For example, the HP Enterprise Service, that's the tower that works, is already bankrupted. They sell to GCX. Now they only have the HPQ that sell hardware. So imagine if the HP didn't receive $2 billion, how will you affect the cash flow? How can I affect future profit? A lot of jobs need to be loose, at least to make the company worth. So I already give like an overview what Jim Croissant said. I already provide the supports and resistance according to Delta. And let's give it, because I'm seeing a lot of anxiety also in the closed group, and people have been saying, but tax is really bullish. Tax bullish. Let's check the monthly graph in the tax in the Nasdaq, and you guys take your own conclusion. Tax is not going to anywhere. So tax could you go to 14K Nasdaq? That's the major resistance nowadays. And tax so far is have been the support have been this blue line over here at 2,949. Tax is really not going anywhere. When you check the monthly graph, you check that, right? The bullion band is really squeezed. The MACD is not giving a buy sign yet. Must is showing us a consolidation. If you put the RSI over here, you see a lot of bearish divergence. And as I said, the upside, this melt up, is concentrated in 10 tech companies. The market is really dangerous setup. Okay, the market was really hedged before, and because that market still stable, creating insight and create a bullishness pattern, not a bearish pattern, because the bears already is gone. Because holding puts so far, the delta have been you have been seeing delta decay, so you have been losing premium or hedge. So it's better to be out of insurance. This is when we see huge drops. When one of those sides is cleaning up. In this case, the bear side. Also in Twitter, you see a lot of calls. People say, oh, I don't want to buy puts because everybody already bought puts, and the sentimental is bearish, but it's not. I give you an example in my video that I post on Sunday. And this is not. Why? Because the markets bring those sentiments to people. So people have been avoided to buy puts. People have been avoided to buy hedge. Dealers are hedge because dealers are the liquidity providers, so they always hedge. Okay, they always hedge. And good CTAs play delta neutral, so they are fully hedge hours. Retail is not. Retail is not. Fábio, market will crash. I can call a crash. I can't call a black swan because I'm not a dealer. I'm just trying to illustrate, the market structure, the perspective, how the movement could be. Another asset that's good to monitor is the king, is the DXY. Look, the pivot already formed. The pivot so far is already confirmed. So I told you guys yesterday about levels. So the first level, the first support, I told you for 102, 315. Losing 315, we could back test 102.85. It's exactly where the pivot is. It's also this, meltdown in dollar is a graph adjustment because the Bullion Band is really wide open, right? It's really wide open. But as you can see, all the bids have been filled. Okay? People are buying. So as soon as you see the DXI, the DXY in trend, it's because something is cooking. People is going to cash. Dealers are going to cash. Okay? Okay, we lose the support to meltdown. The speech is totally different. But so far we have a pivot formed. And so far the pivot is confirmed because after, we see another huge melt up. And now we are entering a consolidation. It's totally normal. It could go back to 102.1005 and then we could go back up. The next resistance is 103.430. Dollar, you cannot measure DXY with supply and demand. Why not? Because we have central banks running swaps. When DXY enter in a trend, even central banks are unable to take DXY dollar down because the market's huge in for dollar. Okay, for example, the Brazilian central bank cannot squeeze Rei Dalio because the Rei Dalio has couple of billions of dollars, more than the Brazilian reserve. So the Brazilian central bank cannot squeeze Rei Dalio, one person. I give you an example. You guys understand how big is the dollar, the forex world is really big. It's really big. So usually when the DXI starts to be on trend, don't go against. Otherwise you get hurt. Really hurt. Okay? So the DXY is another asset that you need to monitor that could show us weakening in risk assets. Okay? Now go back to Saint Croissant. VIX expiration volatility at what is expert. Who will short VIX at 17 nearby 16? Nobody, because it's so cheap. We usually short VIX when above 40. Right? When volatility go above 40, usually the volatility CTA start to short VIX. Nobody wanna short volatility at 17, 16, 15, or 8. It's too low. It's too low. It's too risky, to short bottom. And this is, another, thing that Saint Croissant is looking for to something happens in the near term that could cause a sell-off. Volatility CTAs are not intended to short volatility right now. It's too cheap. It's much better. The risk reward is much better to be long. Right? And he also said about the blow off top. We are, how can I say, because we are flat. Basically, we are in a flat market. creating anxiety and destroying hedge, we could see a blow off top. That's the another thing that he brought in his podcast. I'm just repeating. I'm not copy and paste his call because I already provided my call 1 month ago. I just missed the dates. I was more concerned about May 5 and May 10. But now we have a lot of things in the table, especially our packs on Friday. That's you guys, you can see. Let me put over here the gamma, the expiration notional. You see a positive gamma. Also, Spot Gamma in Twitter said we have a huge call orders that's supposed to expire on Friday. That's a good way, it's a good time to make us collect money. And remember, positive gamma, limited release. Is negative gamma, unlimited release. Squeeze happens. So we are in an environment very good to see a meltdown. Because even if somebody is telling that they are bearish, his allocation, her allocation is bullish. We are in a positive gamma. Different, all the calls in Twitter saying, it's a lot of bears, it's a lot of hedge. Were a lot of hedge. And because that, we see markets melting up, especially by techs. Now, markets is running out of the hedge. And also, the put call rate over here, the only one that's one, if I'm not wrong, is the index. Who play index is dealer. Here, let me find out. The put call rate is everything's below 1. Only CPCI is 1. Only hedged by the index. Who play index? Dealers, CTAs, not the retail in general. Because the level of leverage. Also, Saint Croissant, get a point about the leverage. The cost of the money, companies, borrow money almost for free, and consequently, they improve their business. Now, the cost of the money is 8%. Companies not going to ask for money because money is so expensive. They need to pay high interest. So, leverage tends to be crushed. That's the famous credit crunch. Oh, but the Federal Reserve balance sheet, grow a little bit. Yes, because even FDIC, you'll be supported to handle the 250 insurance from those banks that have been bankrupted. They are not giving another QE. They are not providing liquidity to the economy. No, not at all. They are removing the liquidity to the economy, little by little. Regarding debt ceiling, you have a bunch of theories. I really agree with somebody that said, Paulo Macro, that, look for once one part of, the politics, you want to blame the other parts of the politics. Both is running for president next year. It's much better to see a crash right now, a default right now, and start from the scratch in the next government. Or you want to fuck yourself up if you win the next election. It's much better, one blame others and start from the scratch in the next government. If something's not happening right now, it will happen soon because the 30 trillion debt is unpayable. Something needs to happen. This basically is the global reset that Ray Dalio have been telling since like 10 years ago, right? Or whatever. Also, you see the fractal people, the guys is really insane. No, let's buy Brazil. You'll be the biggest rally ever. Selic is paying 13.5%. The CPI came higher, hot in Brazil. They will not cut rates in Brazil. Also, you saw yesterday Warren Buffett already selling commodities because the 13F is 45 delays. So they delay. They supposed to be bought Apple at the bottom. But they have been selling commodities. Chevron, Shell, and etc. So why are you buy commodities countering if big players are selling commodities right now? They are looking for recession. We don't have numbers for recession yet, but recession takes time because why? Look MasterCard stock. That's, MasterCard, Visa. It's going to all-time high. Let me remove, the zoom. I like it to see, those stocks is going to all-time high. Why? People have been using credit cards a lot. People has a lot of debt. As soon they lose job, they will not be able to pay their debt. Since 2020, I tell to everybody in my group to be a debt-free person. I bought my house and I pay off my mortgage last year because I'm also predicting a credit crunch. I don't want to be affected for that. And then I pay off my house. Everybody in this group that is following me since 2019, I also post my payoff in my group. You guys know that I'm a debt-free person since last year. So when you see MasterCard going to all-time high, Visa is going to all-time high, is because something is really close to be broken. Guys, I'm finished by here. I will provide my vision regarding what could be happening. I cannot call a crash. I cannot call black swan. I'm not a maker. I just, try to provide you guys market structure and the movement during the intraday. Today is really difficult, to predict the movement because the deltas and because the gamma set up. Much clearer a flat market. You guys already know where you have delta and positive gamma and where you have delta and negative gamma. 4,120 is supposed to be hold further drop. 4,145 supposed to be hold further release. Markets kind of locked. Markets kind of locked. VIX have been suppressed. Liquidity was removed 2%. GX jumped 400 millions. Move markets is difficult, at least today. However, the zigzag could be happening, forcing people selling calls and puts and cleaning up the book and allowing makers to move markets more easily. That's what you have been seeing since last week. Bye guys, take care and respect the levels.